There's been a lot of talk about the watch market dying, with articles showing how the resale prices of Rolex and Patek are crashing. While it's undeniably true that gray market prices are far down from their peaks, I would say that the watch market is actually fairly healthy, and it's possible we might see prices rising. For those that are unaware, I recently started a gray watch platform called Legacy Watch Co., and we've transacted on well over $1 billion worth of watches in our first 6 months. This has been quite the interesting experience for me. While I've always monitored market prices of watches, it's very different when you're actively in the market itself. You get a much better sense of demand and supply, and have clearer insight into the actual transaction prices of various watches. Today, I'll be talking about why the market isn't as bad as many think it is, at least based on our experience this year. As a bit of history, the watch market saw prices explode towards the end of 2021, with values increasing massively in just a few months. I remember I sold a Panda Daytona in October 2021 for around 48,000 Sing dollars, only to see prices surge past 70k and beyond just 2 months later. This unprecedented growth is something I don't think we'll ever see again, and by March 2022, we saw prices start to plummet as the Fed hiked rates and the crypto market crashed. The drop in watch prices hit many dealers. With business being so good and the turnover being so fast, this led a lot of dealers accumulating significant stock. As demand quickly fell away, this left some with huge losses, especially if they had taken in high quantum watches like Richard Mille. The turn in economic conditions also resulted in some collectors rushing to liquidate their watches at fire sale prices. In 2022 and 23, I heard stories of watches like the Patek Nautilus 5740 being sold for below retail as people were in desperate need of cash. Despite generally being anomalies and one-offs, sales like this definitely impacted the market. To put the last few minutes of my rambling in a nutshell, demand dropped and gray market supply rapidly grew. So, what's changed? Over the last 6 months, it's become clear that a lot of desperate sellers have already liquidated their watches. At time of recording, it's quite rare to see someone rushing to sell a watch. For those who are selling, they generally have higher price expectations, sometimes unrealistically so. Another interesting observation is how tight supply is for certain watches. Take the f.p.journe Chronometer Blue, which continues to be one of the most hyped independent watches. If I wanted to source one today, there are none for sale in Singapore and very few available internationally. Same thing with something like a Black Dial Elegante, which we managed to sell a few months back at a big premium to retail. Beyond independents, we were trying to source a Patek 5811 earlier in the year and just couldn't find one at a good price. Ultimately, with most fire sales out of the market and supply of certain watches becoming tighter, we are seeing some stabilization and even some pickup in pricing. There are also more collectors looking to spend. For example, those who have benefited from strong equity and crypto markets are looking to buy watches they like, and are prepared to spend on a good example. We recently had a collector that really wanted this AP. Royal Oak tourbillons have never been particularly popular relative to other models in the collection, and this reference isn't a limited edition either. However, our client really loved the stealthy configuration of this reference, and so we sourced one for him. Of course, the key here is that collectors are buying watches they truly like. While it does feel like watch demand is finally picking up, collectors generally remain very selective. This means that performance across brands is very uneven. Generally, the relatively less popular brands like VC that saw prices rise later have been slower to recover. In contrast, Patek remains the king of mainstream brands, while Journe leads independents. Aside from becoming more selective, high inflation has also made some collectors more price sensitive as well. This is generally reflected in the velocity of watches, where anything in the 100K plus price bracket generally has trouble moving. Even if something is in theory a great buy because it's being sold at a substantial discount to retail, collectors being more selective and price sensitive are resulting in supposed bargains being stuck on the market. There's a lot of focus on finding the right buyer, which is why we focus heavily on the international market and sell most of our watches to collectors overseas. This moves me on to the final topic I'll touch on today, which is geographical divergences in pricing and demand. Currently, we see demand for watches picking up in the US and Middle East. Yet, domestic market demand in Singapore is weak, leading to lower prices for certain watches. It's partially a function of Singaporean culture, where many collectors are sensitive to losing money, thus leading to a heavy focus on Rolex and Patek sports watches. Of course, there's absolutely nothing wrong with that, and I'm sure that there are many collectors globally that fall into this category. However, Singapore is fundamentally small, so selling anything that is not a steel Rolex or Nautilus can be quite a challenge. Overall, to answer the question of whether the watch market is dying, I'd probably say no. Yes, there are many watches out there trading below retail and moving slowly, but I see that more as a mean reversion to how things were before COVID. Also, collectors being selective is not a bad thing, but a natural and more sustainable behavior. I'd rather people buy what they like, rather than basing decisions off of speculation and hype. That being said, there's a lot of unevenness in performance between brands and markets. I'm sure some of you might criticize my lack of charts and statistical data in this video, but honestly, I find little value in things like that, especially in an opaque market. What's the point in creating things like an index when you can't accurately capture transaction prices? If you enjoyed this video, do like and subscribe, as the support makes a big difference. For those looking to buy or sell a watch, check out Legacy Watch Co. Thank you for watching.